Today we're going to be talking about the Chinese e-commerce giant Alibaba. Recently, Alibaba announced that they would be slashing their large language models prices by 85%. And on the surface level, this seems like it could be a very negative thing as competition is clearly coming into the market. However, there are a couple of things to keep in mind that we will discuss in this video that are actually a positive for Alibaba and the Chinese economy in general. And along with that, we will discuss how some of these changes could affect Alibaba's underlying metrics. Guys, we are now 30 subscribers away from that 4K mark, and there's only one day left in the year. You guys have been amazing at subscribing over the past week, getting us very close to this 4K mark. I'm not sure we're going to get there, but thank you guys so much for the support this year. It has been absolutely amazing. If you enjoy the content, make sure to drop a like down below and subscribe for more videos like this one. With that out of the way, let's take a look at the YouTube portfolio. It's currently sitting at a value of $58,047.28 and down around 1.25% over the last month, or $700. And I like showing this portfolio to make sure that I'm transparent with you guys as much as possible with positions that I'm holding, especially when I'm going to discuss them in a video. I have a position in this portfolio specifically of Alibaba that's 15 shares and is around $1,100 in cost basis or $1,200 in current market value. I also have a larger position in my larger portfolio. That one I have around 20K in this stock. So again, I just want to make sure I'm fully transparent with you guys. Right now, my Alibaba position is up around 10%. This is one of my newer positions, and I could see myself actually adding to this position, but we'll discuss that a little more in this video. I also have Google, Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. If you've seen a number of my videos, you also know that I hold a couple dividend ETFs, SCHD and VYM. I was buying these over 2023 when a lot of dividend stocks were suffering, and that turned out to be a decent investment. They've returned 12% and 19%. However, with the market going up significantly this year, they have underperformed. And I've thought about selling out of one of these two positions to potentially stack more cash, especially if we see a pullback in 2025. But let's jump into the company that we're all here for, and that is Alibaba. Year to date for 2024, the stock has risen by almost 14%. And that's actually decent for Alibaba because if we look at the last 5 years, every year has been a terrible year for Alibaba, especially since 2021, because the stock peaked in 2020 at almost $310 per share and has consistently decreased over time. It is now down from that all-time high around 72%. So with Alibaba increasing 14% in 2024, maybe it's been a year where Alibaba has finally hit its bottom and it's only up from here. But this might not necessarily be the case because we've gotten word today that Alibaba is cutting the prices on its large language AI models by up to 85%. In a WeChat post, Alibaba announced that they're offering price cuts on their visual language model QuinVL, which is designed to perceive and understand both text and images. These price cuts show a clear indication that there is an increase in competition in the AI market in China, especially as major tech companies in the country such as Alibaba, Tencent, Baidu, JD, Huawei, and TikTok parent company ByteDance have all launched their own AI large language models in the past 18 months. But much like the US, this market is expected to grow at a very fast pace in China as well. It's projected to hit $154.8 billion by 2030. Here in 2024, the market sits around $34.2 billion, so it's expected to almost 5x over the next 5 years. In my opinion, if we look at the last couple years, there hasn't been that much growth. I think that over the next 4 to 5 years, we could see the market double to around 60 to maybe $90 billion, but I think it's going to be hard stretch to hit this $154 billion mark. I think it's more likely to grow at a little bit slower pace than these current projections, especially because the US is known to adopt this technology very, very quickly. However, China is a little bit slower in terms of adoption. So in my opinion, with this market growing, I don't think it's a bad thing that competition is coming in. Yes, the market may be growing slower in in my opinion, than what analysts are projecting. However, I think that Alibaba is going to establish themselves as the #1 player in AI, much like they've already done with cloud. The cloud business and AI business are very interlocked, so I think a lot of companies that are looking for these two services are going to have to look at Alibaba. And with competition, this could actually help them avoid some issues with the Chinese government. In 2021, we saw the Chinese government levy fines against Alibaba for $2.8 billion for breaking anti-monopoly laws. So clearly, with all of this competition coming into the market and Alibaba being forced to cut their prices on not only their AI products, but also slash their prices on their cloud products by as much as 55%, it's clear that there's competition throughout China, especially in the tech industry. That, I think, long-term is going to be a good thing for Alibaba. They continue to be the #1 player in cloud. I think that they will be the #1 player in AI in China, and overall that will help them avoid some of these regulatory concerns that could pop up with the Chinese government because there is this additional competition. The other weird way that this could actually benefit Alibaba is the fact that they are having to cut prices shows general weakness in the economy and actually potentially contributes to the deflationary concerns throughout that country. In 2019, their inflation rate in China was around 3%. However, since that time period, they have seen a consistent drop in inflation. In 2023, it was sitting at 0.23%. And early reports on 2024 numbers indicate that Chinese prices have decreased on average by 0.8%, while consumer prices have risen by only 0.3%. So overall, what this indicates to economists is China has entered a deflationary period in their economy. And these price cuts from Alibaba could ultimately lead to some additional deflationary pressure against the Chinese economy. And that could lead to the Chinese government actually rolling out some additional stimulus. So far, analysts have called the stimulus that China has rolled out as insufficient for the amount of growth that China needs to get their economy back on track. So this could ultimately be a good thing for Alibaba and their business. And in my opinion, Alibaba is positioning themselves very well in this market. They are focusing on large language models that affect enterprise segments rather than launching consumer AI chatbots like OpenAI's ChatGPT. I think that this is going to be massively important for Alibaba's business moving forward because basically what they are saying is they are focused on rolling out AI for businesses and business applications rather than consumer applications. If you're not familiar with Alibaba's business model, they basically connect a number of businesses or suppliers within China to businesses around the world. And what that can lead to is language barriers as well as time barriers. So these AI models that Alibaba rolls out to their businesses can actually help bridge some of those gaps and improve consumer experiences as well as increase sales for their suppliers. And despite all of these issues in China, like a weak economy and deflation, Alibaba is still sitting very close to a trailing 12-month revenue that matches their all-time high. They're currently sitting at $134.4 billion. That compares to their all-time high of $134.5 billion. And they're now getting back very close to double-digit growth year over year with 9.4% growth year over year as of the most recent quarter. They've been able to maintain these higher revenue numbers by giving up a little bit on their bottom line. Their current trailing 12-month EPS is $4.97. That is still quite a bit off their all-time high of $9.37 achieved back in 2019. But they've tried to combat some of this by plowing money into share buybacks. They peaked at a shares outstanding in 2020 of 2.77 billion. That has since decreased down to 2.41 billion, and as of their most recent quarter, they saw a year-over-year decrease in their shares outstanding of almost 6%. Keep in mind that the numbers that we looked at earlier were GAAP EPS numbers. Here on Yahoo Finance, they have non-GAAP EPS numbers, and the average non-GAAP EPS number for 2025 is $8.70. That is an increase from $8.53 in 2024. And in 2026, there is a big increase that analysts are expecting. They're expecting EPS numbers to come in at $9.70. That is a dollar increase year over year, which ultimately shows that analysts are expecting the Chinese economy to turn around sometime in the next year, year and a half. And in 2026, analysts have Alibaba increasing their revenue by 8.5%. In my opinion, if we start seeing the Chinese economy turn around, we could actually see Alibaba grow their top line by 10 to 15%. If Alibaba gets back to top and bottom line growth, eventually their valuation will follow suit. Institute. They are currently trading at a forward P ratio of 8.75. The broader market is currently trading in a range of 20 to 25 for a forward P ratio. If Alibaba were to just trade in line with the rest of the market, that would require the price to double to almost triple. Obviously, no one knows what Alibaba's stock price is going to do over the next year, but in my opinion, Alibaba as a company is in a better position now than they were a year ago. I think there's going to be more stimulus in 2025 that should ultimately benefit Alibaba as well as the Chinese economy in general. With a valuation incredibly low, it's hard to really bet against Alibaba. The stock has traded sideways over the last couple of years, and I could see that continuing in 2025, but I think eventually things will turn around for the economy in China, and overall that will have a big impact on Alibaba. But keep in mind, don't buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, thank you guys so much for a wonderful 2024. The channel has grown so much, and I definitely appreciate all the support that you've been giving. If you have enjoyed this video, make sure to drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what did the tree say after a long, cold winter? Check the comments down below for the answer. Thanks for watching.